my favorite part of this is that I heard this presentation was coming and I got very excited. I'll be taking notes for sure. It's Crypto 2022, the good, the bad, and ugly. And we don't need any introduction here, but I will. It's Michael Terpin.
So this is going to be a little bit of a preview of a longer talk I'm going to give in Toronto at NFTs in a few weeks. I don't have any slides for this one. I'm just going to try out a few things and asked every place I go, what's going on? Are we at the beginning of the end? Are we in the middle? And so I'm just going to talk about what I'm calling the good, the bad, and the ugly of this year. I would say largely it's been a frustrating year in the sense that you had multiple paradigms when you were looking at sort of the price of Bitcoin that then really is sort of the determinant of many other things. You have the stock to flow models, you've got different people with TA models, you've got all sorts of models, and they agree in certain things and they disagree in certain things. They all kind of agree that the basis of growth is the halving, right? And so just like there's 10-year paradigms around the stock market that have been proven over the last 75, 80 years, they typically run around decades, usually have a crash right at the end of the decade or the start of the decade if there's a little bit more money printing. And this goes back to like 1929 with the Great Depression. If you look at some of the other really bad crashes in the stock market, you had one at the end of the 80s, you have the dot-com collapse at the very end of the 90s. Technically it was April of 2000. You obviously had the Great Recession of end of 2008, early 2009. We should have really kind of collapsed from the, there's a lot of economists, my friend Harry Dent says, on demographics alone and actual growth in the market, we should still be around a 6,000 Dow. But the money printing really helped it because people were able to pump their profits up by basically taking zero interest dollars and just buying their own stock back. When you keep buying your own stock back, you're able to go and make a lot more profit per share because you've taken a lot out of the public markets. And so what has happened has been this sort of extending bubble that happened throughout the entire Trump administration. And the ultimate cost of having literally 80% of all dollars that have been printed since the Revolutionary War have been printed in the last 2 years. Yeah. So, and that's showing up in inflation right now. And inflation numbers are all over the map in terms of reality. They're actually coming down faster than you think because the reason why we're having these 0.5% every meeting for the foreseeable future is that they're saying that we're 8.5% and now we're at 8.3%. Well, that's trailing by a year. So most of those things that happened last year, if you actually look at the run rate of inflation, which I think is more reasonable, last month was actually about 4% because it was 0.3 something times 12. And that's really, the more reliable one. Now, of course, they're not, they're sort of they count what they want to count, right? So if you're counting, they don't really count the price of real estate in that, which is up 20%. And if you live in Miami, it's up 40%. And obviously the price of rent then is reflected in that. So there's a lot of things that really mean that we're already in double-digit inflation. And so the Democrats are in office right now. Historically, the Democratic voting base cares much more about the price of gas and rent than they do about the stock market. You historically have the narrative that obviously some exceptions, but you have a higher percentage of either stock market stockholders or wannabe stockholders who follow the stock market in the Republican Party than the Democratic Party. So Trump's big narrative is hey, I'm a huge success because the stock market's up, and don't care about anything else. And under Biden, it's we have to get inflation down no matter what else. And, Herbert Hoover made the same mistake of just being really aggressive in terms of getting, inflation under control, and it ran us into the Great Depression. Hopefully we don't go through the same mistake completely, but this is all affecting crypto in a way that hasn't been historically the case. Up until the last cycle, we had 65% uncorrelated price of Bitcoin to crypto. When we had the big run-up in 2013, there certainly was nothing close to a 100x run-up in the stock market. It wasn't even a significant run-up that year. Same thing in 2017. So the halving is still the thing that really, as long as we continue to have a linear growth in users, and we're over 250 million users right now. When I first got in at the start of 2013, we were maybe 1 million users. So it's a pretty significant number. And by the next halving, we're projected to be, perhaps in the 500-600 million range, and by the end of 2025 is when we may hit 1 billion. Obviously, certain things can accelerate it very fast. I've long said that the first telco that basically says, hey, we're going to onboard anybody with Verizon or Vodafone and to be able to have access to a crypto wallet, that's going to be a big deal, because all of a sudden you've got 100 million, 150 million people that, what is the biggest thing, the impediment to most people in the first world to getting onboarded into crypto? It's doing your KYC. It's having to go in, and you have to go and, and with exchanges, a lot of times you have to go and make sure that the little bot gets your passport right, and you have to go and make sure that you've got your, utility bill and that scans right. And a lot of people are just, particularly, I've had people when the price of Bitcoin was about $7,000, and Biden got elected, a number of multimillionaires who had not listened to me when I said you should be buying crypto 200. They didn't listen to me when it was 1,000. All of a sudden they're like, okay, I see now this is a good time to buy it because inflation is going to go crazy under Biden. And then I would tell them how to get onboarded onto an exchange, and I'd be like, when the price was 30,000, they'd say, did you buy something? They go, oh no, it was way too hard. I wanted to put it in a trust, and the exchanges had no idea how to put it in a trust. And so when you're going in and doing something with a phone company, they already have all your KYC. I suppose it'll be easier for some exchanges to let people put things in trusts, but that's not the mainstream problem. But if you're literally say, tomorrow T-Mobile acquires, a percentage of Kraken and says, okay, now a Kraken wallet for anybody with a phone, they already have your KYC. You need that to get a phone to get a phone account with any of these. Unless it's a burner phone, they already have your address, they already have your phone number, they are your phone number, and they already know where you live. And so instant onboarding. You could be adding 10, 20 million people at a time, and if they're making money, you can be sure that all of a sudden there's going to be this huge explosion of every telco. Nobody wants to be first, but then nobody wants to be last. And so every telco is going to start adding that. I think that's how we get to a billion users. But so the good, the bad, the ugly. So the good is we are still up 50% from the peak of the 2018 cycle. We hit a crazy number of 800 billion on January 8th of 2018. Which was also the CoinAgenda Summit in Las Vegas at Caesar's Palace, and that was the day I got hacked for $24 million, so I remember that day very well. You can Google it if you don't know. I did recover quite a bit from one of the 15-year-old criminals. I'm still suing AT&T. And we're much stronger as an industry, much more diverse. We've gone now where we have many apps, many chains, many wallets. It's a lot easier. DEXs were not even part of the conversation 4 years ago. Now it's just a matter of time as to when they really take over. You're getting multi-chain DEXs. NFTs were really not part of the conversation 4 years ago, nor was DeFi. NFTs now have the capacity, NFTs in the Metaverse, to onboard an entire new generation of users that had no desire to be involved in Bitcoin or Ether or cryptocurrency, but they're artists, they're creators. They want to go and see how they can go in and get their art into a new audience, their music. These are tens of millions of creators who have already dived in, looking how to do this. And they're not selling really well right now, but they're experimenting, and they are, when Beeple sold his collection for $69 million, there was this shockwave felt throughout the entire creative industries that still continues. My friend Brock Pierce has often said bear markets bear fruit and bull markets produce bullshit. And if you look back at all the great achievements in crypto, almost everyone is sort of grown during a bear market. Ethereum launched in, they did their crowd sale in July of 2014 when the price of Bitcoin had crashed from 1,200 down to you were having to pay your $600 Bitcoin, where you're already down 50% and saying, I know we'll get to 1,000 again someday. Do I really want to go and spend, 2,000? Do I want to spend a whole Bitcoin for 2,000 ETH, 30 cents? And those who said yes are pretty happy they did. And then, so the bad, so these are some really good things. The bad is that some really good projects get swept away in the flood. During a bull market, as they say, the rising tide lifts all boats. But during the bear market, the water goes all the way down. You can see all the rubbish at the bottom that you don't want to be playing with. So, but there are some good when money goes away and somebody just was spending too much. This is the stock market. This is in the traditional Silicon Valley. Y Combinator just put out a doom and gloom message of like you're not going to get money. Anybody remember the Tombstone deck from Sequoia back in 2009? They put out a thing called R.I.P. Good Times, and of course they had just raised $1 billion fund, and they were trying to get the price of everything low, but they were like, you are not going to raise money. You're not going to raise money, and if you're going to raise money, you're going to do it in our valuation, and then cut. And of course, that doesn't last as a growth strategy, but you have to know what part of the cycle you're in. I raised money on Sand Hill Road in the early part of this millennium. It was called Internet Wire. We then partnered with NASDAQ, and they were getting funded by Sequoia Capital and Humber Windblad. And we had an exit. We had a $35 million exit. Against my objection, I thought we were selling too soon, but it was like they were afraid the VCs were going to go into a bear market, which we didn't for another 2 years. And I think they were actually just tired of coming down to LA for the board meetings. But I said, we haven't even burned through our initial fundraising, and we're making money. We're making $200,000 a month in profit. Let's wait until we at least have to start paying taxes until we sell. And I lost the board vote on that, so we sold for $35 million. The company we sold to flipped it for $100 million 11 months later. They then sold it back to our original partner, NASDAQ, about 9 years later for $200 million. NASDAQ sold for $335 million back in 2019, and I understand it's now being shopped around again for about $500 million. So, as Bill Gates says, most people overestimate what they can do in a year, and they underestimate what they can do in a decade. And that's certainly been the experience for Bitcoin. If you look back at the price of Bitcoin 10 years ago, it's pretty much at the prices that Charlie Shrem was getting it or less. 2012, I think this month in 2012, you could have gotten Bitcoin for about $3. So let's see. Another thing that's bad is that the whales generally are still the ones who win. The guys that got in and were mining when you could get 100 Bitcoin a day just by running a couple of laptops, and they held on to it. They're able, there's a number of, who knows who these guys are, 50,000 or 100,000 Bitcoin, and they just sort of live a good life, and maybe once or twice a year they'll come out and they'll dump 10,000 Bitcoin that drives the price down, and then they're probably, they're shorting Bitcoin, making sure it goes down because they're the one that drives it down, and then they go and recover and they make a few $1 million and go back to their life and still have more Bitcoin. And there's only a few folks that can do this, but for the foreseeable future, they can still do this until all of a sudden retail comes back in, then they can't do that anymore. Retail tends to go away in bear markets. I mean, it's education needs to be that you don't buy at the top and you don't panic sell at the bottom. But that's what retail always does. I mean, right now, retail is just completely out of crypto. They're like, what, are you kidding me? It was 60,000, it's going to zero. And so obviously, if you look, this is actually one of the better times to buy historically, when the fear and greed is the highest at the fear level. And the ugly, I'd say, is really, kind of the media panic. Whenever this happens, the media love to write stories about, it's a bubble, it's a new time thing, when's it going to crash? Oh, see, we told you, it's now crashed. Okay, it's going to zero. And, but if you just follow the trend, there's never been a period where it wasn't higher than it was 4 years earlier. And that's probably going to continue for the foreseeable future. And then, the other ugly would be the FUD that you get from the government and special interests, and that scares people away. It's like 2013, it was like, well, they're having hearings in Congress, Bitcoin's dead, they're going to stop everybody, they're making a crime, they're going to throw you in jail and throw away the key if you have any Bitcoin. Oh my God, China's banned it. Oh, they banned it again. They banned it a third time. They banned it a fourth time. I think we're about ready for another ban from China. I don't know what else they can ban. The central banks, they always hate Bitcoin. They feel like, threatened by that. And, but if you look at the paradigm shifts that Bitcoin and the whole crypto world have brought upon us, I mean, you really have now, El Salvador going and saying they're going to take Bitcoin and have it be, along with the U.S. dollar, because they gave up on having a central bank of their own a while ago. They just kept blowing it up. But there's another 20 countries in the world that don't have central banks because they just don't do a good job at it. So they have the U.S. dollar as their official currency. How crazy is that? They're being inflated, and it's not even helping Panama or Ecuador or some of these other places that use the U.S. dollar. So El Salvador actually had a kind of their own little mini crypto Bretton Woods summit a couple weeks ago, where they had, I think, 28 central banks from places like Uganda and Central African Republic and Ecuador and Panama and Paraguay come in to discuss, what it takes to go and make Bitcoin. Bitcoin, along with Bitcoin Cash, is sort of unique in the sense that it's not run by anybody. It's not. It's completely decentralized. I mean, Ethereum, they have proven they can roll back the blockchain. So I think that the purely decentralized, Bitcoin-based currencies, and I say really it's Bitcoin and Bitcoin Cash. Not a big fan of SV. Would be the ones that really can function as that. And then there's all these other ones that, the saying is, if Bitcoin is digital gold, then Ethereum is digital oil. And the models of DeFi, we haven't even started with all the applications. So we just have to get past the FUD and just be, happy you're in this room at this date and time, because we're still, in the first or second inning of where we're going to go.